A bit of a mixed picture when it comes to futures. Want to get a sense on how you see this day shaping up. What is your WEX word of the day?
Well, the word of the day is justified. And we're using that because in order to think through next year and what we want to own, after such a big year, I mean, this year has been phenomenal for stocks with dividends. We're looking at close to 27% return for the year. So to hold a position, we really have to justify it to ourselves. Does it really deserve to be part of the portfolio? Is the price justified based on its earnings and future growth and valuation? So that's the word. It really means we've got to look carefully at what we own, whatever we buy, and think about whatever we should sell because we can't justify owning it.
So, Carrie, I also want to get your take on the latest Delivering Alpha Investor Survey and outlooks and strategies for the first quarter and even beyond that. So the nation's leading institutional investors, top strategists, and our own CNBC contributors, like you, being asked which of the Magnificent Seven stocks will post the best returns in 2024. 44% saying Microsoft, 24% saying Amazon, 12% saying NVIDIA, just 8% saying Alphabet, and Apple, Meta, and Tesla. They round out the list with just about 4% of votes each. What's your take on this?
Well, the average return of that group was about 75% this year. I mean, at least that much. So if you're talking about what do we think is going to be the best performer of a group that was up that much, it's really hard to, again, justify that those stocks move much this year. I would actually pick Amazon, not because I think Amazon is selling for a valuation that is less expensive. It's 31 times 25 earnings, which, isn't bad for Amazon. But we think that a soft landing is extremely good for Amazon, and the consumer is going to hold up better in 2024 than people had thought. But I think it could be a relatively muted year for those stocks. They were so strong this year. The rest of the market has to carry the S&P higher. It's not going to be these names again. They were just so great. Everything worked well for them. So I'm giving you Amazon, but that's really with kind of a low bar of confidence.
Really, a low bar of confidence. So does that mean that you think that the market's going to broaden out for another strong year, or you think it's going to not, next year won't be as good as this one?
I think the market already is broadened. We've seen what happened in December. Up until the end of September, about 85% of the returns of S&P came from the Magnificent Seven. And that's huge, 85%. The rest of the market was up about 2%. Now the equal weighted S&P is up 11.5% year to date. So there has been a move, and other stocks have outperformed the Magnificent Seven. That's going to have to continue, we believe, in order for the market to go higher. But again, the top four market caps represent 21% of all of the valuation in the S&P. So you have to get participations from financials, from healthcare, from industrials, from consumer staples that, these are groups that have done very, very little to negative this year.
Right.
And we expect there to be more of that. And yes, that can happen this year if we have lower interest rates and a soft landing.
Well, speaking of financials, one of your picks in the financial space is a company that has not had a great year, Schwab. What's giving you so much confidence as we go into 2024?
Well, interest rates, we believe, are going to start to come down. And the rise in interest rates caused a lot of people to take their cash that was earning very little and move it into high-yielding vehicles at Schwab and other financial institutions. That's called cash sorting. That's ending. The Ameritrade deal is getting resolved, integrated fully. It's a very inexpensive stock on a multiple basis. It started to act better. It was a real underperformer because of association with banks this year, of course. And so we think it has more upside.